Indie Semiconductor is in the process of merging with a SPAC called Thunder Bridge Acquisition 2, ticker THBR. The business combination is expected to be completed in the first quarter of 2021. In this video, I'm first going to give a high-level overview of Indie Semiconductor. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Then I'm going to go over whether or not I plan to invest. And be sure to stay to the end of the video because I'm also going to talk about a few different ways to play the common stock versus the warrants. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And before we get started, please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. Who is Indie Semiconductor? Indie Semiconductor is an automotive semiconductor company. They create silicon and software content inside automobiles. So they basically make computer chips inside cars. Indie's chairman, CEO, and co-founder is Donald McClymont, who had executive roles at Axiom and Skyworks. He has a deep background in running semiconductor companies. Indie solutions are focused on four main areas. Number one, advanced driver assistance systems, including LiDAR and autonomous vehicles. So they want to get the industry a step closer to self-driving cars. Number two, connected car. They want to turn cars into smart cars, just like Apple turned phones into smartphones 10 years ago. Number three, user experience. Car owners want to be able to do everything from their car as they can from their smartphone. And number four, electrification applications, such as being able to better control the charging of electric vehicles. Do they have products? So we see a lot of SPAC targets that don't even have products being used yet. Indie Semiconductor actually does have products on the road today. They've shipped over 100 million devices into automotive tier 1 suppliers, and this number has been steadily increasing over the past 10 years. This top row shows products that are either currently being shipped or that have design wins. And the bottom row shows products that are still in development. As you can see, their LiDAR technology is still in development, as well as their electrification solutions. Who are their competitors? Indie lists these key semiconductor peers on their investor presentation, such as Cree and Ambarella. It also lists the very hot SPAC Luminar as one of its auto tech SPAC peers, which makes sense because Luminar is also focused on LiDAR for cars. I actually think that three of Indie's key competitors that are not listed here are NVIDIA, Xilinx, and NXP Semiconductors. And the reason I think this is because I'm currently invested in NVIDIA and I used to invest in Xilinx. So I've been staying up to date with both of those companies for quite a while. And they both have an automotive semiconductor business. This is important to know because as I continue to monitor the performance of Indie, I'm going to be comparing them to NVIDIA, Xilinx, and NXP's auto tech businesses. Next, let's talk about the SPAC transaction. The deal is expected to close in the first quarter of 2021. After the deal closes, the THBR ticker symbol on the NASDAQ is expected to change to INDI. One share of THBR is expected to become one share of INDI. Post-transaction, there's expected to be 144.7 million shares outstanding, Assuming a share price of $10, that gives a market cap of approximately $1.4 billion. And for you new SPAC investors out there, I always get this question, so I'll try to answer it here. What happens if the deal doesn't go through? Well, in my experience, over 95% of the deals lately have been going through. But there's always a chance that it doesn't go through. If that happens, then the SPAC will typically look for another target. This SPAC has until August of next year to complete a deal. So that would still give them plenty of time to find another target. And they can also file for an extension for up to 1 year. So what is my bull case and long-term price target for indie Semiconductor? First, the main growth driver is that more and more vehicles will require more and more semiconductors in the future. According to Wall Street Research, today there is $310 of silicon content per vehicle. And in the future, it's projected to grow to $4,000 of content per vehicle. That's more than 10x from today's levels. Second, Indie has already shipped 100 million units, and they are the market leader in CarPlay with over 30 million units shipped and 65% market share. Third, Indie's system on chip or SoC solutions are currently on 12 Tier 1 approved vendor lists, which contributes to a strategic backlog position of over $2 billion. Fourth, there's a high barrier to entry in the auto design cycle that Indie has already surpassed. Fifth, the SPAC management team has a proven track record. They took Repay public last year, and that company is up around 150%. Sixth, even though Indie's revenues remain the same from 2019 actuals versus 2020 estimates, which was most likely due to the 2020 global health crisis, this revenue performance is better than the automotive divisions of NVIDIA, Xilinx, and NXP, as you can see from this table. And seven, if they meet their 2025 projections of $501 million, representing an 85% CAGR, I think that they can fetch a 15 times price to sales multiple, which would give them a market cap of $7.5 billion, which is a stock price of a little over $50, and that would make them a 5-bagger in 5 years. That is my bull case for the stock, assuming things go right. So what is my bear case? First, they only expect to achieve $23 million in revenues this year. At a $1.4 billion market cap, that's a 60x price to sales multiple, which is pretty expensive for any stock. Second, if you look at the last bar in this slide for 2025 estimates, the gray part of the bar represents shipping. So I view that as revenues that they will almost certainly achieve. The green part represents won programs, supported by existing contracts. I view that as revenues that they have a good chance of achieving. The blue part represents pipeline. I view that as products in development. And I see that as very speculative at this time. So in my bear case, let's say they don't achieve any of their pipeline goals and only achieve $200 million in sales by 2025. That's still over 8x growth in revenues, which is impressive. However, Wall Street is going to measure this company by its ability to innovate and get some of its pipeline solutions in production, like its LiDAR and electrification solutions. If it can't achieve those goals, I think that the price to sales multiple will probably be around 5x. With $200 million in sales, that would only give them a market cap of $1 billion, which would be a loss of around 30% in 5 years. Do I plan to invest in Indie Semiconductor? So I actually bought 50 shares of THBR 1 week before the announcement, because I really liked the SPAC's track record with Repay. Little did I know they were gonna announce a target just 1 week later. So that was kinda cool. My cost basis was $10.35 per share. Today's closing price was $10.50 per share. Now, I really like the industry that Indie is in. Personally, I've seen more and more tech in the vehicles I've owned and driven in the past 10 years, and I do believe that this trend will continue. Because of Thunder Bridge's track record with Repay, I do believe that Indie has a good chance of achieving its targets. So my current plan is to just hold my 50 shares long-term, even past the merger. I do consider this to be a highly speculative play, so I don't really plan on growing my position until I see more evidence that they can achieve their projected growth. As I follow Indie Semiconductor on future earnings reports and press releases, I'm going to continue comparing their revenue growth with NVIDIA, Xilinx, and NXP. And as promised, I'm going to tell you a few different ways I'm playing the common stock versus the warrants. Even though I'm long-term on this stock, there's still a lot of euphoria in the market these days. And this is a company that could potentially pump in the short run like its SPAC peer, Luminar. If for some reason investors pump up the price of Thunder Bridge to at least $15 per share in the coming months, I will strongly consider selling and taking 50% profits. Other than that, I plan to hold for the long term, as I mentioned earlier. However, if I were to swing trade, pre-merger at $10.50, this would be the ideal time to swing trade. In case you don't know, SPACs have approximately $10 per share held in a trust. So barring a black swan event, the price floor for this SPAC before the merger is just about $10. After the merger, the price floor disappears and the stock trades like any other stock. Just remember, this $10 per share is not guaranteed. So I always try to protect myself from black swan events by not investing more than 10% of capital into an individual stock. So just remember to manage your own risk appropriately. What about the warrants? Most of you know this, but if the common stock remains under $18, then the warrants shouldn't expire for another 5 years after the merger is completed. If they stay above $18 after the merger, then the company could redeem them early. I made a video about SPAC warrants for beginners, and you should definitely check that out if you want to learn more about warrants. So if the stock goes up to $18, the intrinsic value of the warrant would be $6.50, which is $18 minus the exercise price of $11.50. The warrants closed today at $2.20. I'm currently waiting for the warrants to drop even further, and I'm waiting to try to get them for around $1.60, which would give me a potential 4-bagger return if the stock goes to $18 after the merger is completed. So those are a few ideas on how to play the common stock and the warrants. Of course, my plans may change at any time, so always do your own due diligence if you plan to invest. So tell me what you think about Indie Semiconductor and what other SPACs you're watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I'll see you next time.